Good morning, everyone, and welcome to SPX Daily Plan, where we kind of divine what is more likely or less likely to happen today in the market, look at possible levels to trade, look at things that might come up that might influence the market, and generally ramble and schmooze about different things. Okay, so and the more detailed plan is in my daily planner on Substack with like the full details of the roadmap. Good morning, Boomer. Oh, and there's my buddy Richard. Okay, and if anyone that joins and wants to go on the stage, just ask me and I'll put you on there to talk. Um, okay, so quick recap of yesterday, and then we'll go on to today. Yesterday, the PPI came in hot. Where was it? Somewhere in here. Thursday. That must have been it. The PPI came in hot. Inflation fears, they quote unquote, meaning the algo overlords, didn't like it. We had a big down goes Fraser before the open, undercut and reclaimed, and opened at 40-ish, which was right where the IC whale, and those many of you follow me know what the IC whale is. He's a hedge fund plus has some retail followers, does large iron condor trades, and the bottom of the put credit spread was right down here at 64.40, and we tested it and it did its job, positive gamma mean reverting, etc. And so up we went. Hopefully you guys understand what that is. This is not the time to explain the gamma in its entirety. But basically, when market makers are long gamma, they hedge opposite the direction of the move. So when we go down, they buy. When we go up, they sell. But then as we move away from the up, as we're moving down, they start buying if it's above it. And so you get into these compressed ranges. Anyway, the whale actually closed out a bunch of his stuff at around noon, which is unusual for him, and that kind of freed us up to move a little bit by not much, and we closed pretty much in the middle of the range of basically a flat day yesterday, which again we expect going into an options expiration, range compression. Nothing was surprising. What did happen yesterday at around 2 o'clock? The YLD family of funds, which is yield max, sells at the money calls on different products, and on Thursday they buy back just the one on the Nasdaq, the NDX QQ at the money calls, and and this was in my note, and I talk about it every month for who knows how long. When they buy back, statistically, it tends to be supportive, and they bought back at 2 o'clock. Now let's find them at 2 o'clock. And here they come in at around 2 o'clock, and what do we see? The local bottom. Just saying. Just saying. Local bottom right there when they start buying back. Okay. And so that was yesterday. Now we had the PPI. I'm not seeing much of a reaction. Nice, Richard and Rick and High Flyer, you guys are on the stage. If you want to go, if you want, I can put you up here to talk. If you want to ask a question or comment or whatever, just like let me know in the chat. I don't want to put you on the spot if you don't want to, but that's up to you. Oh, I have a... Sure. Okay. Yeah, Richard's a man after my own heart. Okay. So let me continue with my spiel, and you can chime in. And so here we are Basically flat at 75. Here we are basically at 75. It's okay. So I don't know what the PPI did, but as we can see, not much of a reaction, which is fine with me. Okay, we also have Goolsby talking, I think. He's talking today, I think at 8:30. Maybe he's on TV, like talking about the reaction. He's been kind of dovish. And the narrative is really still, no one expects them not to cut rates. I mean, somebody does, but it's pretty much 93% rate cut. The real narrative is 25 versus 50. It was leaning 50 before. Now with the numbers yesterday, some people are leaning 25. I have no idea. I have no idea. What I do know is we have Jackson Hole coming up, and that could be a potential event, and we have non-farm payroll coming up for September, and people coming back from Labor Day, and that tends to be a weakish period. And we have end of the month options unclench, and we have unclench for VIX expiration, which we'll get to in a minute, on August 20th. And we have NVIDIA earnings coming up August 27th. So there's stuff coming up that could make us free to move around the cabin, and a pullback 1, 2, 3% or not, who knows, wouldn't shock me. And and that is to be determined once we see the positioning. Is I don't, your crystal ball is as good as mine. I try to just stick with the data plus intuition, quantuition, my tagline. Okay, now that we got that stuff out of the way, let's see what's going on. Also, let's talk about VIX real quick for a second. And so, as I'm sure most of you are aware, VIX has been scraping by these local lows. Look at this. To get down to where we were, basically the December Santa Claus rally level was lower. The January, February top, VIX was higher. And so VIX is pretty low. Does that mean it has to go up? No, yes and no, but yes, if you know what I mean. Um, so here's a chart of VIX. So VIX is kind of low, but we have VIX options expiration coming up next week, and that we tend to stay locked under or over where the big positions are. And right now we're locked under 15 and 16, and we're going to look at that in a minute. If not, you can take my word for it. VVIX, on the other hand, I don't know why is it freezing on me. Hello? See the little bubbly dots? Okay, well, while this is freezing on me, okay, that's frozen, so we're just going to move on to something else. VVIX is high 98. Considering how low VIX is, VVIX is high. The VVIX-VIX ratio is almost 7, 6.7, and that's just one of those VIX people like to use ratios to kind of figure out what's going on. And it's high normal. 7 is kind of the highest range of normal by most metrics. Some will go a little higher. High normal, complacent, you better start, you might want to think about buying insurance when you can, not when you must. I prefer using VIX products, VIX flies or ratios or debit spreads, however you want to trade VIX, rather than SPX options, only because I don't know where we're going to be when it happens. Or I might use a fly, an SPX wide fly, a butterfly. But again, that's beyond the scope of this conversation. Yes, descending stair pattern, decreasing candle size on the daily too. Right, so range is compressing. Range is compressing. Whether you're looking at a TA candle pattern, whether you're looking at it from put call ratio pattern, whether you're looking at market breadth, whether you're looking at VIX, all roads lead to Rome. And they seem to be saying that, it's time. But we've been saying that since July, since June. And so news of my death has been greatly exaggerated, so I don't know. But certainly, gun to my head, I would say the odds for the next 2% being down versus up are, I would put the odds in that camp for today, just for today. Okay, so where are we? We're right here, 64.70. Let's see if this thing. Oh, there's my VVIX. Thank you. So you see, VVIX is high. You wouldn't. So there's demand for VIX for volatility that's creeping in. VVIX often leads. Often VVIX leads, and then VIX starts to rear its ugly head just a little bit. Then we get the pullback. So there's, a canary in the coal mine. And we have a few other canaries in the coal mine. I didn't look at this yet, so let's look at this together. So actually, it'd probably be easier to look at it this way. Yeah, let's just look at it this way. So TDEX demand for the out of the like the 3 standard deviation wings is up. Nations index is up. SPX demand for 1 standard deviation out of the money wings is also up. I don't know which percent, which is up or greater percent. Doesn't really matter. Typically, the tails lead, whereas the at the money vol is down. So at the money volatility is cheap, quote unquote, whereas, which we could tell VIX is low, whereas the wings are getting expensive. The wings are getting expensive. Okay. So, so now that I got that done, well, wait, what am I doing? Am I in the right thing here? No, I'm not. That's not the right one either. That's the right one. Okay. I got a lot of tabs. Okay. Bounce area. That's an old. We don't need that anymore. Okay. Goolsby. I just saw a headline, something Goolsby, but I didn't see what it was. Okay, so here we are. So now we're going to look at options depth, which is my preferred measure of strictly SPX gamma. I use Mentor Q for other things and Gamma Edge for other things, individual names and a few other things. Mentor Q has futures, which really no one else has that I know of. So anyway, yeah. So here we are at this inflection point, and so that's pretty much our above-below question. If we can get above 64.70, and we might fight around here for a little bit, then 64.85 would be the target, but we would probably stall before that, 64.80. And that's written out in my daily plan in detail, in my roadmap. Should we get over this hump here, well then 6,500, big, look at that, the big, trust your eyes, that's a big magnet. That's market maker short, customers long. There's 9,000 long calls there ish. If we head in the path of travel, when market makers are short, they hedge in the direction of the move. So if we can get over here, whatever this is, 75.80, if we can get through this, 6,500 is where we would head. And of course, that's not much of a shock. That's not much of a shock. I like to look at the shape of things, and we have this fly-looking structure right here, 8505, right above this, um, 6500. A 90, 6500, 10 fly would be interesting. And as a matter of fact, I have one. I have a 9. I have a 10 wide fly right here that I put on. Actually, I put it on whenever I put it on. It doesn't really matter. So I have this locked and loaded and ready to go. $1.20. I think it cost me 80 cents or 60 cents, and we'll see. So I already have this fly. It's more expensive now than when I put it on, but it's probably interesting thing, if you want to play it. And we'll look at how you play these things later. Okay, getting back to this. Um, if we should get over 5,500, 6,500 somehow, 500.05. If we get over this mess, I think in zones, not in terms of sharp lines. Then 25 would be the natural stall point. We probably wouldn't get there. If by some miracle we get over 25, then stall anywhere near here with this little hole at 40. So at 65.40 being where we would end up, but that's like probably not going to happen. We'll be lucky if we close up here. Probably be a flat to downish close. I would say the chop zone that I identified, 85 to 50. All right, now let's talk about to the downside. Should we stall out and fail here, which we're not doing yet? Wait, do I have the wrong? Looks like I got the wrong one on here. Here we go. This is the right one, I think. I think I had the wrong chart up there. I'm not great at some of this stuff. I have like 16 different trading views open. Okay, I don't know where the one I had open before was. Ah, here it is. Okay. I don't know how to find the one that I want, so I guess leave everyone open. Most of you know that technology is not my strong suit. And I just saw a Goolsby thing. Anybody know what Goolsby is saying? He tends to be a dove. And Richard, I'll let you pipe up in a second. Okay, so here's top of the chop zone, what we were looking at before. So this comes from basically this and a few other things. I'm not going to go over everything that I have. I added some features for my subscribers. I have VIX standard deviation moves and a few other things. Guys, if you don't know, look in that channel. I added, that thread that has like charts and musings and whatever and little numbery things that I come up with, because if I wrote a narrative of everything that goes on down when I go down the rabbit hole, I'd be writing a book. Okay, so if we go below 70, the path takes us toward 6450 round number. Not a shock. Not a shock. And so here you have, in this zone, we have what we would call a classic dealer profile, where this pulls us up and we stall. We stall on the way up, but it pulls us back up on the way down. This pulls us down to 6450, but it decays as time passes. If you ever long an option that was nice and green and time passes and stock doesn't move, suddenly it goes from green to less green to red as it decays. And that happens to these, and as time passes, suddenly it stops pulling you and starts pushing you. And that's kind of the classic dealer profile when you hear Jem Carson talk about the Vanna Charm rally into monthly options expiration. That's what he's talking about broadly, because broadly, the big boys and girls tend to sell calls and buy puts for protection because they're managing large money and wealth and people want protection. And so that's kind of the big landscape, oversimplified. If we get below 50, then 40, we have, some stuff here at 40, 25 and 20, we have this double cluster, and that's basically where we should end up. I mean, not where we should end up. That's basically the farthest extent of the mood. Go ahead, Richard.
Yeah, you're in the part of the strikes that I had a question about, like this lower end.
Okay, go ahead.
The question I have is, there is some juice at like 64.10. There was more, and I'm hesitant sometimes to sell that. I would rather wait for the open and try and sell something there if price moves down, if that makes sense. So it's almost like a directional, like wait for the premium to get a little bit better and then try and sell it versus selling it before the open. So is that like a wish? Could you put like a wish order in or something like that?
Okay, yeah. So let's talk about that. And like he said, I tend to. Hold on, I'm just doing this as a way to get a quick way in here. So hopefully you guys could see, and not investment advice, blah blah. What? And this depends on the way I would look at it is it depends on how many you want to end up with. Okay, so what I like the 10 level, looks pretty good. 10.05, wherever it is. So for me, 40 cents is kind of a minimum on a 20 wide. I'll take it if I have to put a gun to my head. So I'll put in one at 40 cents. Now I probably want to have 20 at the end of the day. So I'm putting in a small thing almost as a placeholder. And so this is up to you, your position sizing, etc., you collectively. At 50 cents, I'd kind of like to have some. Let's go with 4 at 50 cents. That gives me a 5 lot. If I could get, now I don't want to go too many more because there might be some disaster that might befall us. So I'll see what happens from there. And then if it goes down, it might go down to 50, like we said, where these might be worth 90 cents. So I want to leave myself some room just in case. But I personally would rather have enough in that I can add, but not too much where if we get to 50, let's say, or 40, I have to sit there and say, well, you know what? We broke a key level. Are we going to go all the way down to the bottom? So now with these, I wouldn't be that nervous even with that because I don't think we're going down there pretty much no matter what. So I might be willing to sit through what I call the fake pain. Let me put in one of these over here. I don't mind this. So I'll put in one at 25 for 50 cents, just one. Now, where it gets dicey, now a lot of people like to do 5 and 10 wide. Oh, my brother. Hello, haven't seen you. Haven't seen you in a long time. Haven't seen you in a long time. We did some side-by-side trading, and he has some of his own secret sauce that he uses on top of other people's secret sauce back from my mentor Q days. Good brother here, good brother. Glad you're here. So anyway, getting back to this. Now, if you're somebody that likes to sell 5 wide or 10 wide, you're probably going to have to go here. Somewhere in here, and 35 maybe. And that's fine, and it quote unquote should hold. But what happens if we get down toward 50? You know, you have to think about this when you plan your trades beforehand if you're a seller. Okay, so let's say, and for some of you in here, I know who you are. I'm not going to name names. Um, you guys are sellers. Hey, good morning, Aaron. Is that my Aaron? I'm not sure which Aaron that is, but I have a brother that I have a buddy that's an Aaron. Anyway, if you're selling 5 wide down here somewhere, which should be safe, and we're at 55, and you're nice and red, and 50 is a magnet, then you're going to be real red, and we broke a key level, then what do? So you need to have a risk management plan before that. It may be closing them, it may be rolling down, it may be something else, it may be butterflies, it may be adding to it because you say, you know what, we're going to go down here. We might even test it and undercut it like we did. Yes, last week we had a bad day where we undercut 64.40 or 63.40. I forgot the number. We undercut the 40, went to the 10 level, and had the V back up to 40. So let's just pretend hypothetically we break here, we go down to here, we stall down here, you're in the money, and then we get the V back up. Not suggesting that, but if that's your plan, if that's what you think would happen, that's part of your plan. Now, if you're from California, very strong, 65.50, sell 64.40.
Yeah, that trade that you talked about yesterday, it went down to 40 and then reversed, and you sold spreads at that time. That was a
Right.
really good trade, and that was a really good call out. But you hit the nail on the head as far as answering my question is, you're starting with you're asking the question, how many positions do you want to wind up with? And then you can maybe pick and choose. It's like scaling into it.
Like scaling in, exactly, right.
Yeah, scale in. Yeah. So 100%. Perfect. Thank
Now,
you.
you're welcome. Now, what I do, and again, this is just me, not investment advice, blah, blah, is, and I'll just show you the way I have my trade set up, and somebody did this for me. I put a gun to my head. It might take me a month to figure out how to do this. I have these already set up with a 65% buy to close. And if they close, they close. I'm happy. Give me my 65%. I'll take my 35 cents, pay the house, pay the casino, and that's fine. Because once in a while, you get hit, or we go up and they close, and then we just have weakness at the end of the day. If you leave them open, you went from being pretty profitable to being flat to red, and then your decisions and whatever. Also, that frees me up to sell more if I want to. And so that's just my preferred method. Some people leave it to expire worthless. Some people do it because of pattern day trading. They don't have a big enough account, so they can't close it at the end of the day. That's a different calculus. But getting back to what we were saying before, let's talk about the 10 wides. So if you like to sell a 10 wide spread, that's a lot of money, 70 cents. The 25 looks like a decent area, right? We looked at that on a 10 wide. That's 45 cents. So you could probably get decent juice at a safer level here. 35, 40 cents. That's decent juice as far as I'm concerned for a 10 wide. Some people like to get a lot more, well, you can play it this way. I mean, you could even, again, non-investment advice and all that. Don't sue me. Well, you can sue me if you want. I don't care. Well, I actually do care. That would be a pain in the ass. You could do something like these. There's a lot of stuff you could do. And what dictates what I do is not so much delta. I know a lot of people say, really erroneously that delta is the percent probability that something is going to expire in the money or out of the money. It's not. It's how much. Um, it's how much the the value of the option is going to change with a dollar move in spot, and deltas aren't equal. A 16 delta call is not the same distance from a 16 delta put, etc., etc. But that's a simplified way of doing it, assuming a normalized distribution. And we know stocks don't move in a normal distribution, but for tasty works, that's a good way to sell the idea. Anyway, I'm done with that rant. Um, what else do I want? Oh, yes, QYLD and the YLD family of funds. Let's talk about that. Let's go to Gamma Edge for that. And let's go back here. Where's Gamma Edge? My buddies at Gamma Edge. Come on. Discuss amongst yourself. Aaron from California. Yeah, 6440. I would certainly try along there. I don't think we get there, but we could. Now, another reason certainly I'm going to be buying back today. Let's remember we have the YLD family of funds. Actually, now that I think about it, I might take some of those off and add, or give myself more. We have the YLD family of funds, yield max, QYLD is at the money, 30 DTE AM expiration calls a month out on the Qs oversimplified. XYLD is on the SPX, RYLD is on the IWM. There's also the other products like NVDY, which does it on Nvidia. A friend of mine put like 20 grand into it like a year ago, and he's up about 40%, less than Nvidia though. You're not going to get the appreciation on the stock that you get on with those that you get on just owning the stock. That's not what these are for. But the point of this isn't to critique yield max. I own some of them too. I like the income. That's another story. The point is to talk about they will be selling at the money calls in SPX, the Qs, RUT for IWM, and this thing doesn't want to load. As well as for Nvidia, as well as for Apple, as well as, and so that's going to send the market down. Statistically, it does between 11:30 and 2, I think they sell, and so there were 5,000 here yesterday, wherever they were. They closed them. I don't know. They might have. I don't know if they updated their data. But what we're going to see, and maybe there's been a little front running, what we're going to see, what's the September monthly expiration? Is that the 19th or is that the 15th? Anybody know offhand? I think it's the 19th. But let's see. The 19th, yeah. Okay. So what we're going to see is at the money calls. We already got some here, 1,000. So somebody front ran that, and every institutions know that this is going to happen. I know it. Plenty of people know, and there's front running of this trade. And if you're a fancy algo, you know how to front run it because you know they're going to be selling it. You know they're going to be selling it. And so what does that mean? That means all these negative deltas are going to come in NDX. And I'm going to tell you what we're going to do. And you watch me on Twitter. Uh, my thing isn't doing very good today. I don't know if it's okay. So what we're going to see is at the money is 23832 ish, wherever it is. So let's just pretend it's these. What we're going to see is, where's volume? What happened to volume? Volume. We're going to see volume, and let's just put open interest here for the second. Here's the ones here's where the front runners were. So we're going to see volume start to pick up here at around 11:30. 200, 500, usually they're in 40 lots, 80 lots. And what they do, here's an option chart. What they do, they try to sell at VWAP. So they'll be trying to sell at option VWAP. And that'll be sending us down. And what I do is I look at this and I look at the chart and I post it on Twitter sometime if there's time, or I put it in the chat with my subscribers and we talk about it. Now we know this is going to be happening for NDX. This is going to be happening for SPX. So in the September SPX chain, we will be seeing, aside from all the other rolls, we will be seeing, we don't know the exact strike, but let's just pretend 6,500-ish or 6,470. Another, I think there's 6,000 of these they typically do. And we'll be seeing that sell coming in. But there's also going to be rolls today, so that's going to be kind of hard to game out, but it doesn't matter. We know that flow is going to be coming in. Then it stops at around 2 o'clock. I think 2 o'clock. Suddenly, what often happens is, let's just say hypothetically, the day opens and kumbaya, it's looking good. We go up, we maybe test 90, maybe something happens and looks like we're going to hit 6,500 for a second. Maybe we even do. And then we, retreat back into the zone where I showed you before we're supposed to. And we get a little weakness here. And then they start selling and we're down near this pivot area. And we start going down. And then people start buying puts near the money here. And then we hit 6,450. And then everyone's nervous. And then we're hanging around here 45 to 55, like where we were kind of stalling out yesterday for a while. Maybe we even undercut yesterday's low. Oh my God. And come back up. And then they stop selling. And suddenly we end up back at 75 or 55 or something for the close. That could happen too. So these are all the if-thens that are in the back of one's mind, my mind, hopefully your mind. If you're scalping, it's the same calculus. If you're scalping, you want to know, where are we going to scalp? If you're swing trading, when am I going to enter it? So it doesn't matter what trading style you do. I like to sell spreads. Everybody knows. Iron Condor, everybody knows me for that for a long time. I'm known for that for a decade. Also, I like to trade butterflies. I like these little butterflies, and I'll do some call, debit spreads, some swing trades, whatever. But anyway, that's that. High flyer. You want to add a question, comment?
Hey Doc, yeah, I can you guys hear me? Can you hear me?
Yes, yes, I can hear you.
Okay.
So that,
When
yeah,
you were talking about the scenarios, what would you do? Have a game plan when for when something goes wrong.
right.
We were talking about that, and you were talking about some of the options there. One thing I wanted to chip in with was I think, at least to me, was an important that becomes an important factor in terms of deciding what size I want to have for the positions, because if, for example, the levels I am at get breached, I want to roll lower. And maybe when I roll lower, I want to be able to roll in a bigger size, right?
Right.
And so the way I think about it, and I'd love to get your opinion about it. That if I need to be able to roll at a much bigger size, say 2 times, 3 times, 4 times bigger, so that I make up for any losses I may be incurring. That kind of then automatically sets what kind of size my initial position should be, so that I can, then go bigger into that kind of quote unquote emergency situation that my levels get breached. I don't know if that makes
And
sense.
it makes sense. And I do that kind of thing too. It takes a strong stomach. It takes a strong stomach, and every once in a while you really can get slammed.
Yeah,
But yes, I do that. And if you leave enough sizing, then you don't get slammed. The other thing, especially if I think I might do that, and we've talked about this, I might do something like, let's just say hypothetically, I sell these, and let me see what the premium is for these now. These are probably more now. 55, good, I'll take the 55. I like that better. And these are probably maybe 50 by now. No, 45. I'll see if I can get that. I'm not going to add too many now because I reminded myself about the YLD people selling. So I'm going to give myself a little room. So what I might do, so let's just say these get filled, then we go up, they're a little profitable, whatever, and I decide I don't want to close them. I might do something like buy a little 5 wide vertical for 10 cents. I got 50 cents credit. I'm willing to give up 10 cents credit and buy maybe as many as I have here, maybe half, on the idea that if disaster should befall and we go through, I'm not taking a $20 hit. I'm taking a $5 hit. And then that lets me think more clearly about if I want to close it, if not, if I want to roll it down, that frees me up. Or if we move up enough and it's cheap enough and I know YLD is coming, I might buy something over here. Now, I wouldn't pay that much for it. I might do 1 or 2 as a placeholder, but I wouldn't do the whole thing because that way, like, I give away my day. Or we had that 40 number. What sometimes makes sense, and each situation is different. I can't say mechanically what to do or not do, but if I might think of something like this. That's too expensive. Could even do find a cheap 10 wide fly. 40, 30, 20. Find the cheap 10 wide flyer for 30 cents, and that could be 30 cents thrown away, but it also forgives an abundance of sins because that thing will really blow up on you, and you could, if we end up down here, you'll make so much more than you might lose, etc., etc. And it gives you plenty of room to maneuver these. And so there's just so many different things you could do. Now, if I have this right, 40, 30, 20, right, okay. So that's an interesting, that's something else I might do. So each situation is different, I suppose, is my point.
Yeah, that makes total sense.
And I actually like that. I might look to put that in. Target down, pre-market. Now I'm just seeing CoreWeave. Yeah, I had some CoreWeave puts that I closed yesterday. Wow, this one's down 14%. Globulent. I forgot what they do, but that's one of those high flyers that people like. Air taxis are up. Air taxis are up, and semiconductors are down. No comment. Uh, oh, look at the semis. Oh, yeah, AMAT got right. AMAT missed. Okay, so I don't know about you, but I think it's safe to say that the semis have not hit their high for the next 6 months or a year. So when do you get in, if any, to some of these names? And again, I don't know, just what I'm thinking. I think it's early for those. We have NVIDIA coming up. Some of these names I like. I like ASML. That's one I've been watching for decades.
Yeah, and SML has been plenty weak the past, year to date.
Yeah. That's one I haven't gotten in it yet. I've sold the occasional put on it. Now this is an old chart style that I used to use way back in my TA days. I don't really use it anymore, but I guess I just pulled up an old thing, time axis. I want to give myself a little room here so I can see a little better. DMI and Williams percentile were the things I used to use, and these are Bollinger Bands and Keltner channels. I used to use that crap. And it's still good, but that's not the point of this. The point of this is there might be some names that you might want. AMAT. I don't know. We have a semiconductor bill coming up. Something to think about. Would I want to sell puts in that? Maybe. Would I want to maybe do a risk reversal? I don't know. I would think about it.
I guess there is also a lot of short covering happening in Intel because of that.
Yeah, right. The Intel thing. Yep. The Intel thing. So we have a lot of stuff going on, and I tend to front run a little bit. I'll be honest. I tend to front run. I tend to take a little pain, and typically it works out more often than not. Otherwise, I wouldn't have the capital to be doing this. It works out, but that's not everybody's style. Some people want to wait for the turn, and that's fine, or you might want to leg in. There's different ways to do it, but this has certainly got my attention. AMAT down 14% has got my attention. And
right,
so
I'm going to hop off.
I'm going to hop off myself.
Thank you, Doc.
Thank you. Thanks, everybody. Oh, and I have to leave early today. My son's future wife, I guess, whatever, fiance's bridal shower is tomorrow in Boston. And so we're driving up there. My woman is going to the bridal shower. Apparently, I'm hanging out with my son and his friends until the shower is over. Then he makes a guest appearance, and whatever they do, whatever the style du jour is. And so, I'll be saying goodbye at around 1:00. All right, let me see what I got here in the private chat before I go. Nice, enjoy. Okay, take care, everybody.